In this video, I'm going to show you what to look out for when looking at a company on Yahoo Finance in terms of financial information or financial metrics specifically. So if you go on Yahoo Finance, on the left side, you're going to see statistics. And then you're going to see a bunch of numbers here. Obviously, in this specific example, I'm using Meta. So one of the important financial metric to look out for is the P/E ratio. So the company's P/E ratio essentially means how much the market is willing to pay for $1 of earnings that the company generated in the past 12 months. So in this case, you see the trailing P/E, which is at 21.15, which means the market is willing to pay 21 times for each dollar of earnings that the company generates. Another key financial metric to look out for is forward P/E, which essentially takes into account the company's expected earnings for next year and how much the market is willing to pay for each dollar of future earnings. When I say future, is for the next 12 months expected. Another thing to look out for, another ratio to look out for is the PEG ratio, which is essentially takes account the 5-year growth of earnings. So it takes the PE ratio and divides it up with the expected earnings growth rates for the next 5 years. In this case, you see here is essentially it's at 1, which means that the company's expected earnings will grow by 21% for the next 5 years, and the company's trailing PE is 21. So therefore, the PEG ratio is at 1. So this is an important metric, especially for a growth stock. So obviously, the lower the number here, the lower the PEG ratio, the more undervalued the company is in comparison to its PE ratio. Another ratio to look out for is price over sales, which means essentially how many times the market is willing to pay for each dollar of sale. So if you scroll down, you're going to see more ratios and numbers here. Obviously, the profit margin is very important to look for, and the operating margin. The profit margin essentially means that how much each dollar will contribute to the net profit of the company. So in this case, for each dollar of sales, about 38 cents will go to its net earnings. And another metric or percentage or ratio to look out for is return on equity, which is a crucial ratio. It's like it says, it means how much earnings per amount of equity on its balance sheet the company is generating. So in this case, it's at 37, which is really high and really good for a company. So any company that has a double-digit return on equity percentage is a really good company. So if you scroll down here, you're going to see a bunch of numbers. Obviously, EBITDA is important, gross profit, revenue here, total cash on hand. So Meta is sitting with 78 billion amount of cash on its books. And the current ratio is at 3, meaning the company has 3 times more current assets than current liabilities, which signifies a really good financial health of the business. And if you scroll down further, you're going to see how much of operating cash flow they generate, which is related to their core business activities. And also underneath that, you're going to see free cash flow, which essentially takes the operating cash flow and deducts any capital acquisition that the company makes, and then you arrive at free cash flow. Free cash flow essentially indicates how much cash the company has to either keep it as cash or issue dividends. So yeah, this is the quick overview in terms of what to look out for when looking at Yahoo Finance and some of the financial statistics or financial metrics of a company.